Hello, welcome to the video where we will look at the historical performance of the algorithms we use in our live portfolio. These strategies were created using our quant monitor templates and methods, which we explain in detail in our courses. This is not a short-term backtest. I will show you the results from the last 15 years, from 2010 to the present. We will walk through how our strategies have performed under various market conditions, during trends, in periods of increased volatility, and during sideways movements. This allows you to assess their consistency and robustness yourself. For testing algorithms for forex, I will use data from RoboForex. I will start with the Euro-Yen algorithm on a 15-minute time frame and will choose data from 2010 to the present. I will further choose modeling on minute data. I will start testing. I see that the equity curve started for me in 2010. The test is complete. This is what trading with the Euro-Yen algorithm over 15 years looks like. There are periods which are relatively long where the algorithm does not earn. And then there are periods in which it makes a good profit. It is inherent in the nature of these markets that for 6 months I may experience better volatility for my breakout algorithm, and in another half year the market may be more sideways with lower volatility, making it less successful for that algorithm. Here are the statistics for the past 15 years. A total of 752 trades were made. Let's move on. We'll try the algorithm for the euro-dollar. On the hourly time frame, I will again select dates from 2010 to the present. So the test is complete, and when I look at the test statistics, I have a profit factor of a total of 1.78. A total of 385 trades were executed. Next, I'll move on to the forex pair. Dollar yen. Time frame M15. Data from 2010 to the present. I have completed the test. I will look at the results. The profit factor is 1.29. A total of 576 trades were executed, and those would be the 3 forex pairs that I have in my portfolio. Next, I will look at gold. There is a time frame of M30 for testing from 2010 to the present. I have completed the gold test. The results are as follows. Profit factor 1.61. A total of 713 trades were executed. And what about of stock indices? In this case, I will use data from DarwinX. These will be futures contracts as they have the longest history, and that is sufficient for a retest in a related market. So I have completed the DAX test with a profit factor of approximately 1.32 and a total of 1,008 trades. Next, I will test the NASDAQ. I will use futures data for testing the Nikkei index. Strategy Quant. As for the futures data, I have data from 2009. For the Nikkei index directly, these are data from Strategy Quant. I will give here tested time frame M15. January 2010. And I'll start the test. When I look at the statistics, I see that I've completed a total of 1,383 trades with a profit factor of 1.39. And I can take a look at the balance graph. Essentially, based on the past volatility and how the index has grown, I have the results accordingly. It concerns a related market. I am testing on a futures contract and trading CFDs at forex. As for the overview of the last month, so I will take a look at the performance of this portfolio. And I can see that my profit factor is 1.47 since the beginning. Some maximum exposure was 7.7%. The balance chart, or the performance chart of that account, looks like this. And when I break it down into individual symbols, I find that gold performed the best. The account appreciated by 12.3%. In second place is the DAX index. It brought the account 5.7%, then the euro 1.2%, and other currencies along with the Nikkei index are basically down 3.6% since the beginning. So it is clear that over the past 4 months, some things have performed better while others have performed worse. And that is precisely the essence of this portfolio, because individual. Symbols that perform better can cover some longer-term losses from a symbol that is currently performing worse. Here I have then a demonstration. How that curve distributes the profit among the symbols